Hello, my name is Julia Dreblow. I'm the founder of SRI Services. We specialise in retail sustainable investment. This brief presentation is to give you a run through of the SDR, which was published about 5 weeks ago. And just a few things to say first. This is for information only. It's designed for UK retail financial services professionals, and we're not regulated or authorised to offer advice. And the way our business model works is that although we have a database of all funds in the retail investment, sustainable investment market, we have partners who enable us to provide this information for free, and their funds are listed first on our site with the logo next to their funds. All other funds are listed also, and we carry the same information, and all our information comes direct from fund managers. Also to add that I had helped the FCA to create the SDR as one of their advisory board members. I was a DLAG member, and it's been a long time coming, so delighted that it's now live. So what are we talking about here? We're talking about the FCA's new SDR information, which is sustainability disclosure and requirements and investment labelling regime. It's basically a regime that's designed to help clients understand sustainable funds better and funds that do and don't focus on sustainability better, to avoid greenwash and avoid all the confusion and the things that have gone wrong over recent years, where fund managers have been overstating the situation, and differences in opinion have led to a great deal of confusion. So more consumer facing disclosures and information on individual funds and also on fund management companies, tidying up on marketing and naming and the way funds present themselves, and also some requirements for distributors to make sure that the information actually gets through to clients. So as I just alluded to, there are really half a dozen core elements of this and all the other images on the presentation are lifted direct from the SDR, so you will recognise it when you go into the paper. There's anti-greenwashing rule to stop clients being misled, and just tighten up on the use of language in this area. There's 4 labels now, not 3 that were originally proposed. There's new naming and marketing rules. So anything that a fund manager says about this area, or for that matter, any regulated entity, they've got to be a lot more careful now about the way they refer to this area. We can try and stamp out the sloppy use of words. And specific consumer-facing information is now a requirement. And detailed information needs to be made available to clients so people can understand where funds actually invest and how they operate, and the related stewardship activity, and requirements for distributors to make this available to their clients also. So this isn't all happening at once, because although the FCA has devoted a lot of resources to this and it fits in with the government's green finance strategy, etc., so it's very high profile, it's being brought in bit at a time, partly because of FCA being able to get out talking to the right people, but also so that it's not insanely difficult for fund managers to work with. So the paper's been published in November 23. The anti-greenwashing rule comes in at the end of May this year, so 2024. The labels can start being used once funds have worked out which funds they are and aren't going to label, and which labels they're going to choose. That starts from July. Naming and marketing rules come in at the end of this year. And then product level and entity level disclosures for big firms start in December 2025, and entity level disclosures for smaller firms start in 2026. So what investments are we talking about here? So what we don't want to do is stop anyone from talking about sustainability. Climate crisis, biodiversity crisis, human rights issues, etc., etc. We've got to get everyone talking about this stuff. However, this is all about tidying up those funds that are specifically marketed as being primarily about sustainability. That's their core point of differentiation, and the labels bring that one out. So you've got a table in the document that really sets out what investments are in scope and what investments are not in scope. And there are a few things that have changed since the consultation paper, and I've circled a few that are of particular note here. So one is around the fact that the consultation paper basically had a long list of words and said any words to do with sustainability would now be subject to new rules. Yes, there are new rules. You've got to be careful and make sure clients are misled, but there's only really now 3 protected terms. So they've made it a lot easier for funds that do not focus entirely on sustainability, providing they meet certain requirements, to basically talk about what they're doing on the ESG side in particular. They've created a new label for blended strategies. That was something that was asked for by portfolio managers in particular, so that if you have a fund of funds of some kind which invests in lots of different sustainable funds, you still want to be able to use a label yourself, so you would use the new blended label if you're investing across those different fund types. Then we've got other information. For example, the use of the word sustainability now, thank goodness, not sustainable, because saying that something is sustainable implies it's perfect and a slam dunk and all perfect. Not the case. Sustainability, it's a process. We're not there yet. So the wording has changed very slightly. There's more focus on sort of driving positive sustainability outcomes. So the focus is more on being positive, and there is going to be a requirement for client-facing literature to be separate, so individual items. Okay, so some of the key points in the naming and marketing and basically wording things right section are around labelling and non-labelled funds both being in scope, but there are only 3 protected terms, so not quite as onerous as it could have been. Client disclosures have got to be standalone. They will have to be specific information on sustainability attributes for individual retail clients. There will have to be 12 monthly reviews for everything. There will have to be entity level reports as well, which are to be consistent with TCFD, which is what fund managers are doing already. And you can cross-refer, so no need to rewrite everything every time. And the anti-greenwash rule goes live in May, so that's when people have really got to get their literature sorted out by. So labels, the highest profile bit of this is definitely for intermediaries, for advisors, planners, wealth managers, etc. The key bit you're going to see first off is going to be the labels. There are now 4 labels. Those labels are sustainability impact for those funds that are aiming to deliver specific, measurable, real-world impacts and outcomes. Sustainability focus for funds that are invested in assets that already meet certain documented sustainability standards and criteria. Basically, they'll be holding really good companies, as will impact funds. Sustainability improver label will be more for funds that will be holding assets that a lot of people will see as being controversial. They won't be perfect, but if we're going to change the world and move forwards, we need to work on those companies. So we've allowed a label, the FCA has allowed a label that says, yep, improving companies is important. And then there's the mixed goals label, which is all about if you want to invest across those other 3 characteristics or types of fund. So what are the main qualifying criteria for them? Well, you'll have to have a sustainability objective, which sets out what the sustainability purpose of the fund is, if you like, what are the positive attributes that they're supporting. You'll have to document your policy and strategy and make sure that at least 70% of the assets of any labelled fund will be in line with the fund's objectives and policy. You'll have to set clear APIs that will be measurable and reviewed regularly. Resources and governance will have to be in place to make sure that you've got the skills in place to make sure you can run a decent fund in this area. And then stewardship activity, so what firms are doing across the board to engage with companies, vote or encourage more issuances of positive, say, bonds that solve particular problems. That will have to all be documented also. It comes into play, it's relevant to this area, so it falls under SDR. Right, so as I say, this is only a summary, but here are some of the key points that you can expect to see and that fund managers will have to do on the labelling side. So it's all about helping clients and better transparency and making it easier for people to find individual funds that have got particular attributes. At least 70% of the assets will have to be aligned to the objectives, but no assets can be directly in conflict with the objectives, so that's going to be interesting. Label funds will have to be registered with the FCA. That can be done online. There is a requirement for independent assessment, but fund managers do not have to go externally for independent assessment, providing they've got suitably qualified individuals that are not part of the investment process for an individual fund. Those people will be able to check and confirm that the fund is invested in line with its objectives. The impact label no longer has an additionality requirement, so you don't have to prove that something couldn't possibly have happened without a particular investment being made, but they will have to set out what their theory of change is, so articulate how you want to see the world become a better place, how you're trying to change things. The annual checking will be required. Annual checking will be required for everything, like the literature and the appropriateness of labels, etc. And there will have to be escalation plans in place. So within your stewardship activity or fund's stewardship activity, there will be an expectation that funds will document what they will do if an asset is not responding as they had intended or hoped to the engagement requests that are intended to drive higher sustainability standards. So you'll have to have a plan in place that says what you do in that situation. Now, the FCA has not been prescriptive about what any of that should look like, but it's got to be credible, it's got to make sense, it's got to stand up to scrutiny of clients and others. divestment is not, however, a requirement of escalation plans. I find it hard to imagine with some funds how that can work, but let's see how that one pans out. And of course, there's the aspects that do relate to non-labelled funds, which have got the NL letters next to them in the document. So basically, if a fund is using a lot of words that talk about environmental and social issues and sustainability or ESG, etc., they'll need to have a statement that just basically explains what it is they're doing, make it all clear. That's explained on page 115. So key attributes of the label, there's the requirement to have objectives, positive environmental social outcomes articulated, and they've got to be able to describe the standard of sustainability of the assets that they hold and have KPIs, and stewardship activity, talk about what the stewardship activities they do in their escalation plan. But the important thing I wanted to highlight in this slide is though that these will be different for funds with different labels. Okay, so the standard of sustainability will be different, if you like. I mean, look, assets vary, and any fund is going to hold a lot of different assets. But broadly speaking, you can expect different types of companies and different things to be looked for and reported on, and different types of KPIs across the different labels. Okay, so this was only ever intended to be a very quick run through. I've spent a lot of time working on the detail of this lately, so I hope I have managed to pull out some of the key relevant bits, particularly for intermediaries. But basically, this is about naming, marketing and greenwashing, making sure the right information is put in front of people so that clients who actually know something about sustainability and are interested in sustainability don't feel they're being misled, and they can make the right decisions that meets their own needs so that they can get the outcomes that they're looking for, again, in line with consumer duty, etc. So this information applies to sustainable and non-sustainable funds, so any fund that talks about this area. Although the focus of the requirements, particularly the labels, is obviously the funds that are likely to use the labels. They're the specific rules. Fund managers can choose, though. They don't have to use a label. If a fund manager is not comfortable using a label, they do not have to. Strategies will therefore continue to vary, and that's a good thing because different clients want different things. And also the whole SDR is worded in such a way to make sure that the FCA is doing nothing that could possibly interfere with the innovation in this market, providing it's helping to drive better sustainability outcomes. So they want to encourage innovation, but make sure it's communicated in such a way that makes sense and can be proven and is measurable and able to be evidenced, etc. The aim generally is to make sure that clients will know where funds will and will not invest. That term is used within the paper. It focuses more on positive attributes. That was a word that was added in on this policy statement that wasn't in the consultation paper. The 70% rule is important. The fact there'll be more disclosures is really important. It's a key feature. Disclosure is a big part of this. Haven't gone into a lot of detail here, but consumer-facing, pre-contractual, ongoing and entity level will be required. There'll be further clarification rules that will follow. The paper's got a table in it which explains exactly when those are all happening. The anti-greenwash one is already in play. Platforms will have to carry labels and consumer-facing disclosures. That is brilliant. We've got to get this information in front of clients. The FCA knows that. And big picture, this is all about aiding client understanding and decision-making, better outcomes, and helping drive a better an easier transition to higher sustainability standards. And part of that, of course, is pricing and communication, pricing of assets. So there's lots of background to why this matters within the paper. So very briefly, I'm going to now just do a couple of slides on how we can help, because this is the kind of stuff I've been working on for the last 30 years, trying to get information out to people, and in particular with our database that we launched in 2011, helping people, financial advisors, planners and wealth managers, match individual client aims to fund features and attributes, and what the funds actually do has been the mission I've been on for a very, very long time, what I've been trying to solve. So what SRI Services does to help with this is to run a database called Fund EcoMarket. It's a free to access tool which is whole of market for this area, and we collect information annually direct from fund managers. It's designed for intermediaries and it's open to everybody. So we don't write the information on it. The only thing we do that's our work is the SRI styles and of course the layout and the questions that we ask. The SRI styles are our own classifications which predate the SDR, but they are they're representative of our opinion based on what we've read of fund literature, etc. And of course, we welcome people. Please do add URL links through to our database. We want everyone to use it because we want everyone to change how they invest. And please do come and talk to us if you're interested in APIs, etc. This is something we do already. So in terms of generating lists of funds that are likely to match up to an individual client's needs, there are three main areas of the filter. There's the fund basics, tells you what type of fund it is. There's full fund information, and then there's fund management company information. And each of those are three tabs that basically open up, and I'll show you how they look in a second. Okay, so this is the basic fund information on this slide. Product type, asset type, geographic region, and the SRI style, our classification of an individual fund. SDR classifications will be put alongside this when those changes are made to the site and fund managers have decided what they are. The next filter area then is a lot more detailed, loads and loads of options. We group the filters as being around sustainability and the environment, social and ethical issues, governance and management type issues, methods and intentions. So what are the funds trying to get towards? What are they trying to deliver in addition to looking at individual issues? And then the final of the three sections of filters that we ask about are the company-wide information, that corporate stewardship, responsible ownership, call it what you like, but we've grouped it into two main areas, basically who's involved in the process, who's doing what, and who's involved in the process, and what and how do they operate. So what are the engagement approaches? Is there anything across the board an asset manager that they won't actually invest in, etc. So a wide range of information there. Every single filter option within these boxes has got a hover over text of information on it for you so that you can look into basically a little bit more information on what I'm talking about, what the filters are all about. And basically as you go through, as you're clicking, the list will be generating automatically, and within every fund then you've got on a section as you go down into the fund list, which is below all the filters, you can click on more info and you get a whole load of fund information, and we separate that into what the filters are. So we show you the list of filters for that apply to an individual fund, then policy information, process, corporate ownership, and then dial shift to how a fund is aiming to help shift the dial, and then links to literature to get you onto the fund manager's site to save you searching around for the relevant areas of literature. So basically all you have to do is you go into the database, you click some filters, you generate a fund list, and you can save or print your findings, or look into full fund information if that's what you're looking for. You can print either just a list of fund names or the full information, and it's all free to use. Just go in and use it. And all that remains is for me to say thank you for listening. I hope you found that useful. Hope you found it interesting. SDR is hugely important. It's going to become part of the backdrop to advisors and intermediaries' everyday lives very, very swiftly. Final thank you also for our partners who enable us to do what we do for free. And if you have any queries, please do look on the website. Contact details are there. Feel free to get in touch. Thank you.